We are live. Hey, Kingston, how are you?
Hello. Good. How are you, Stefan?
So nice to see you again after a long time. I
Yeah.
think, remind me, did we met the last time?
Yeah. When's the last time I see you? Davos, 2025, not
Wow.
2026.
Finally, I
Yeah.
get you. I get you on the call, and
Yeah.
today we
More than
share
a
a
year.
recording.
More than a year ago. Yeah. Yeah. How you
Nice.
been? Thanks for
Super
having me.
good.
Yeah. Thanks for
Super
having
good.
me.
A pleasure to have you. So, welcome to the House of Trust live stream. Today, with a dear friend, Kinson, founder and CEO of Dot Investing, a London based private market investment firm serving family offices and sophisticated investors. Alongside leading investments for external partners, he also manages investments for his own family office based in Hong Kong, where I have to come and visit you,
Yeah,
giving
you
him
should.
giving him a unique perspective that bridges institutional discipline with long-term generational thinking. Kinson is an entrepreneur shaped by extensive experience across business building, venture investing, and private markets. His portfolio spans innovative startups, private markets funds, and transformative technologies. As a sophisticated investor, he is particularly focused on businesses with durable models, exceptional founders, and technologies capable of reshaping industries over the long term. But beyond capital allocation, Kinson studies people. Because in private markets, capital rarely flows into ideas alone. It flows towards founders, investors trust. Founders who communicate clearly, think strategically, execute consistently, and understand how serious investors assess risks, resilience, and opportunity. This conversation today explores what truly makes a founder investable, not only in a pitch room, but over the long arc of building enduring companies. Welcome, dear Kingston.
Thank you. That's a lovely introduction. Yeah. Thank you. Yeah, I love to pick up your last point, study of people. I like that a lot. Yeah, as an investor, especially in investment, not only in startup but private equity, all kind. I think that's never say enough. Yeah, it's all about meeting different people, partnering, investing alongside with different people. Yeah.
So before I ask the questions that I had in mind, let's get into into this question, Kinson. Um, how do you evaluate a human being when it comes to investing?
I think it comes to phases. I think when it's a learning curve for a lot of us. For me, as an investor, as even actually a founder myself. Yeah, when I found out investing a few years ago. Yeah, before I invest, a founder and also a combination of both now. Um, Funnily enough, I think at this stage, I think we believe more and more into intuition. Yeah, trusting your gut is a very powerful thing as a human being. I think we see when you have a conversation with people, how I get to meet you first place. Yeah, you know how you will get along with these people and how they communicate, how they shape their idea, how they sell their vision. Um, I think that all come along with to a long way, and then a lot of time is also a fit between the founder, the investor, the partner, the employer, the employee. That would that complementary? Yeah, would that fit to become a co-founder running a business? I think that also goes a long way. Sometimes, let's say when we see investing in a company, there could be multiple founder, one or two or three, and some of them they could be the visionary. They're always thinking the optimistic one. They are always selling the vision. 90% is all about, okay, I want to get there. Yeah, I get to a billion valuation. Yeah, and but you need someone who kind of maybe themselves. Someone could be a combination of both, or could be another founder kind of bring them a little bit back, like looking at what's the risk, yeah, how we mitigate different risks, yeah, what's the potential obstacle we see, and setting a short-term milestone. So I think all that work together as a team, yeah, internally, but also between founder and investor.
You already answered the next question that I wanted to ask. It's what makes a founder investable? What are the skills that he or she has to bring with? Is there anything else that you haven't mentioned yet?
I think, yeah, definitely. First of all, they need to understand the business very well. They understand the market, the business. And when I say the business model, sometimes it's not necessary to be the vision of the technical thing, but also the execution. How do you bring the company to the market? What's the strategy going forward? And then also that's coming down to a pitching environment. So as I mentioned earlier, a lot of founders, they focus on selling the idea, selling the company, but they're lacking of how to achieve different milestones. So you're thinking at not getting to the next step of the fundraising is not the outcome. Bringing the capital in, I think it's important to today. What's the goal when you build a company, and then the capital in is just a tool help you to achieve the goal in the long run, but not thinking about what's the runway. Okay, let's get this run up. That's the runway for the next 2 years, and then that's the runway for the another 2 years. Yeah, I think it's a different mindset. Yeah.
Now we jump directly into it, and one step before is who is Kinson? How did you
Yeah.
ended up doing what you're doing today?
It's it's interesting. I come originally from Hong Kong myself. Yeah, now live in London. Spent seven years now in London. Yeah, 7 years in London. Spent time in the US. Yeah, went to business school in the US. Started my career as a trader in the US. In between, also spent years in Germany for different different reason. Yeah, we can dive into next time. Yeah, and then building Dot about 4 years ago, coming from the family background in real estate, we do quite a lot of investment in private equity venture side before I founding Dot. And at the time when I met my partner Luke Dixon, coming from an institutional background, so we want to build a company which can help family offices navigate the private market, but also providing a helpful capital in a better use for startup founders, could be a fund manager. So it's coming along both ways. And coming from a trader background, when you're looking at the number, it's always a numbers game, right? But I like this private market better is the people. Yeah, you talk to people, you meet people, you work with people, instead of just trading on the spreadsheet. Yeah.
Nice. Thank you for sharing. For you personally, when you decide on investing in a project, how much is purpose and impact a factor, and how much is it profitability? If you have to define it in percentage, what would be your answer?
It's hard to get to define in a percentage, right? So when you come in investment, like you have to when you say investable, you have to make good return. You can't sacrifice the return. Then other than that, you put that into a different category. That's called philanthropy. Yeah, you can do a lot of things on philanthropy into impact. But if it is investment, the bottom line is you have to make a good return in investment. That's what we're seeing. Impact could be a lot of different things. Could be environmental, improve people. Could be governance. And then what I like to use is a future-proofing company. Future-proof
What do you mean by that?
mean this company could sustain cycle. Doesn't matter what the technology change. Yeah, they will move onward. Yeah, and also when it's kind of also related to social environment impact, because future proofing means how doesn't matter how the earth or everything goes. Yeah, this company still providing a sustainable future for what the human being, what the world is gonna need. I think that's kind of the mindset. Yeah, what we when we're looking at impact in a way, instead of just a pure pure environmental or social side of the spectrum. Yeah.
It's interesting, I was at this family office
Yeah.
event in Dubai a few years ago, and there was a gentleman on stage, and he talked about how proud he is that 1% goes into impact investing and 99% is just profit driven. And I just see that we still live in a world where people believe that impact investing is charity,
Yeah. Yeah.
and I would like to live in a world where impact investing is at least the same profitable, if not
Yeah.
more profitable than traditional investment.
Yeah.
But it's a journey.
Yeah, I think
Yeah.
it's different category. I think also it's also coming down to the family, because when you're a family office, a lot of them is driving their personal agenda, personal interests, right? So what
Yeah.
an investment, of course, besides making good outperforming return, especially when you're looking at venture, you want it outperform the other asset class, other market. Otherwise, why are you investing in venture capital? The risk is much higher. And also another sign is, I think, is a personal interest for family offices. It could be something their hobby of the principal. Yeah, it could be something they like. They want to get involved, or there's something they are personal passionate about that specific sector, that specific industry, or that specific company. I think that also coming down to get to know and understand what this particular investor family are when founders, they are coming in before they coming to asking for the company for the money, because sometimes the alignment of interest is just not there. Doesn't matter how successful these founders are, this company are. Yeah, if the alignment interest is not there, I think it's probably just waste of time. Yeah.
What would you say, Kinson, with your experience working with family offices? And I don't know if it's able to define it, but what would you say? How many of the family offices that you worked with, or in your own, is it? How much is wealth preservation and how much is wealth multiplication?
Yeah, I think it's also very different from jurisdiction. Let's say, I'll say on European family, a lot of them, more of them, not a lot more of them are looking at longer agenda, longer time horizon, like 10, 50 years, even 100 years onward. In terms of wealth preservation, they don't need 10x, or something in their investment. They just need a sustainable growth and wealth preservation, and also the legacy of their investment, of their family name. And then we look at some Asian family, let's say, the older generation of Asian entrepreneur. Yeah, I'll say, because we're looking at most of the family in Asia is like two generations. Some of them is the first generation family. The legacy is not that long. A little bit older generation, they're looking at more conservative investment. A lot of them probably invest in real estate. Yeah, similar industry where their operational business, they make the money from. Yes, because they understand the market well enough. And we do see, let's say, the second gen or third gen of those family now, they're definitely getting into a venture space, because various reasons. Some are good, some are bad, some maybe sound cooler, higher risk, higher return. And then some of them, they want to definitely give a little bit more involvement, helping, using their private capital to help business grow, how to make an impact, or build something disruptive in different industry. So that's what I see in kind of different jurisdiction, different generation. They have like different type of time horizon, and mindset.
Yeah. Talking about the wealth shift, that is happening through over generations, and I would describe, yes, the next generation, right, and the new generation. What for a chance and possibility do you see in this generational shift that is happening with the younger generation taking over and a fresher, more dynamic mindset?
Yeah. It's definitely from the asset class we can potentially coming into, right? I mentioned earlier the newer, the younger or the next gen, definitely looking for more exciting business model. Yeah, particular in few sector in the last few years, like definitely AI is a sector they're looking at. And then for what we focus, AI, healthcare, I think healthcare, and also particular in energy transition, because the world is very different. Nowadays, we're looking at 10 years onward, what it's going to be. And back in the day, a lot more real assets. I still think from a family perspective, diversification is still the key. Yeah, you can't in the AI world. I do think the real assets might have a higher value than what people expected it will be. Yeah.
Talking from the perception of founders, what makes a family office attractive as an attractive partner for founders?
I think first of all is the strategic investment from a lot of family office, because like with family office they could come from various background. They have basically most of them definitely have a successful operational business. Doesn't matter is running or not, and also the extensive network with a lot of family office they have. So they could, depending on the industry of the company, help them in terms of cross-border distribution, marketing, networking, between investor, partner, of their friends. I think that is one of the key thing. Very different than a fund. And also, the family office decision making usually fairly straightforward, because you're dealing with one or two person, yeah, who is principal. Of course, the more institutionalized, larger family, they run like institution. They have the IC, they have a large investment team, but most other family office still run a very agile, lean investment team. So the decision maker usually sit on the principal. Is you getting along, you get to know the team, the principal, and how this guy can help you to shape it, to put the company to the next level. Yeah.
One more question about this topic is, how does family office capital think different from traditional venture capital?
I think what we cover likely a little bit. I think from VC perspective, they always have their criteria in term, because they have to report to the investor. They have the set strategy, and it doesn't usually change. Yeah, if the strategy work, and so they have to think it what particular sector, what particular stage, and then certain fixed criteria in terms of the number. If you're going to a Series A or B onward company, what is a minimum a ARR they have to be, and all those things. And also because it's running from a fund cycle, so they necessarily looking at the 5 to 7, 5. It's getting shorter and shorter now, the fund cycle, 5, 7, 10 years. Yeah, they need an asset plan in that. So for some family office capital, they could, let's say the wealth preservation one, they can afford to hold it for longer. They don't restrict it to the company need asset in 5 years or so. Even though now you see some more and more family, they don't like the liquidity. Yeah, but that's not for the venture investor, I think. And also I think the family capital coming in what's the best way to put it? They want to get a little more involvement, we see, from some of the family offices. When they put in their own capital, one of the reasons they want to put in is they want to be a little bit involved in with the company. Sometimes it's a good thing, sometimes it's a bad thing. I think it's that the transparency, the communication between the investor and the founder has to be quite upfront, because when it's too much involvement with the investor, sometimes it's not the best thing for the company. Yeah.
True. Kinson, if there would be a number, what would you say? How many pitch decks and projects have you screened and reviewed over the last 3 to 5 years?
I don't have a number. That's,
Approximately?
I don't know. That's 3-5 years. Thousands. Yeah. I mean, some of them you don't spend much time on it. I mean, nowadays easier. Yeah, nowadays you can utilize a lot of different tools to help you to do a lot of initial screening. Yeah.
That would be my next question. Yeah. Do you use technology AI to evaluate projects?
Yeah, nowadays it's much quicker in terms of like that. Yeah, we have something internally fairly straightforward to build up. You can basically put a lot of our own criteria. You can screen out a lot of those things. You back in the day, even I talked to a lot of other family or even venture capital fund. Yeah, this helped to streamline a lot of their investment much more quicker. Of course, how good is the result? I think we are still still early to design. Yeah, maybe that's maybe some hidden gem got screened out. Yeah, and I think that work better for more established stage of company, because the number is definitely more relevant compared to a seed stage company when you don't really have a lot of like number to do. And that's coming back to the first point. Yeah, is about the founders, about the people. How are they the right people to navigate? And then when also especially coming down to the obstacle, the challenges, how they can pivot. Yeah, when the market shift, I think that's very important. Particular in that mean all the company are there, but particular in the early stage, because you don't have other numbers or other criteria to back up. Yeah.
Mm-hmm. What do you see? What is the most common failure that founders do, or why are they failing to raise capital?
Good question. I think I think first of all, I think I highlighted before is ignoring the risk, because when the early stage founder, all of them are ambition, exciting, selling, good storyteller, selling the vision, selling the dream, but coming down, what is the foreseeable risk and how they're gonna mitigate that, and then what is the challenge and competition. I think a lot of them they see it, but they don't face it. Like they don't really face it and find a solution to solve that. And I think that is definitely a red flag. And then also when I think a lot of founder will ask what you see, a lot of investor will ask what you see yourself or the company in the next 5 years. A lot of the answer we hear is like, okay, we're gonna grow this company into how many market share, yeah, and they always give you a financial forecast, which we find that 90% of them are not realistic. And then, but I think more really helpful is like giving us ready set milestone. what's going to happen 3 months later, 6 months later, 12 months later, different milestone, and how you achieve that, what's the plan to achieve that, instead of giving a quite vague vision. I mean, the vision is important, but yeah, but the execution is even more important, yeah, more critical, yeah, than the vision and idea. Yeah.
When it comes to pitching, when you have a founder in front of you, might be physically or digitally, what is one of the mistakes that you see that happens often with founders pitching?
I think it's focused too. I think they focus too much on what they want to tell instead of what the investor want to listen. Yeah, because they all get very excited about telling the story about the company, what we are doing, what we are unique, quite how this technology is amazing, what's their competitive advantage, and then what's the growth plan. It's all important for sure. But I think from the investor perspective, is I'm putting the money to your hand. First of all, how you get this money, why this is useful, and how you can get the return back. I think they're basically like investment 101. How I can get the return of my investment. All the other thing is good, but I think it's like probably sometimes listen to what this, also understanding what this investor are. I think a little bit background research will be very helpful, because sometimes when it's not a good fit, and then probably not even the right investor, even it could be the right chat, but sometimes it doesn't mean the right partnership. Yeah.
So true. An investment, and that's also something that I've learned over the years, is not revenue, it's a liability. So whenever you take money from an investor, it's something, it's energy that you take in, and you have to be careful what type of investors you onboard.
Yeah.
And you can onboard multipliers, amplifiers, people who accelerate your mission and vision, or you're gonna bring people in who just see the short-term profit and then are in your cap table and slow you down.
Yeah, I think it's get along with different founders, investors. I think is key. I think for my little feedback is a lot of founders, they think it's a win or it's a prize after the capital raising round. The capital is a prize. Okay, I have successfully raised how much X amount of capital. But I think the real prize is the partnership, who you're getting on board with you in this journey together. Sometimes it's more important than what's the amount of the capital you have to raise. Yeah.
Kinson, you mentioned a few times execution power. How can you specific a bit more? What does strong execution actually look in from an investor perspective?
It's very good question and a hard question to answer. Yeah, because every business is a different, right? I think what we see, let's say one trait I think is very important we see in a founder is how agile they are in terms of pivoting in different scenario. Yeah, sometimes when you see a business plan come in from day one, that doesn't necessarily mean that is their business model. Yeah, which give them success in 1 year or 2 years or 5 years, because the market change, technology change, people change, and then if you stick with what, okay, really stubborn, stick with what, okay, this is gonna work, and then you doesn't pivot at the right moment. That is, I think that's a killer for a lot of early stage startups. So they have to understand how the market changing, what everything shifting. Maybe something doesn't work, but how they can make it work. That agility, I think, is a really key trait, and then goes a long way in terms of execution. Yeah.
Mhm. What traits makes you believe a founder can navigate uncertainty? Because you just mentioned it.
That's it. That's it. Yeah, I think that's it. What else? Communication. Yeah. Clear communication with the investor, with the team, with the market. I think that is also very, very important. Yeah.
And a personal question. Imagine you have invested in a company and they had a specific business model, and then they pivot and they turn and become a total different business and company. How would you react as an investor?
Depending on how is it good pivot or not. If it's growing, yeah, why not? Yeah. Yeah. So I think it's then you make a right decision, yeah, to pivot, to adapt. Yeah. And yeah, if it's growing healthily, yeah, and then yeah, that's a good one.
Yeah, why I'm mentioning it, because it's my personal story
Yeah.
with Yasi Trust. When I started in 2017, 18, my God, wow, time is running. We were positioning ourselves as an
Yeah.
application, as a self-paced e-learning platform, learn to earn, play to earn, a crazy application that we have developed, and we had 28,000 app downloads, conversion rate to
Yeah.
5% to members, a decent success. But then I felt deeply that if we want to create systemic change, I have to focus on a top-down approach to build a network of investors and capital and connect them with founders. And this is the new positioning of Yes We Trust.
Yeah.
And what I can understand is that along this journey and pivot, that you're going to lose certain investors who say, hey,
Yeah.
Steph, I don't get it anymore, right? That's not what I invested in. That's not where I put my money
Yeah.
in. So since 2 years, I'm in this process of cleaning up the cap table
Hmm.
and buying out investors who invested in 2018. And yeah, it's an interesting journey. And then you have investors who deeply are connected with the mission that you're
Yeah.
at. And yeah, just a big learning that being careful with who you onboard as an investor.
Exactly, and also coming down to what's the reason they invest, right? Because a lot of them, especially in the early stage, they invest because they want to invest in you. They are not necessarily care. Of course, they care, but less about the business model, about the market. Yeah,
Mhm.
because in early stage, they trust in you to can make their investment. Yeah, work and more valuable. I think that's a
Mhm.
lot of them is coming from that. That, but yeah, not all the investors are the same. There's nothing wrong with some people,
Yes.
yeah, who might not believe in the same. Probably they don't see the same vision again. But I
Mhm.
think uh, finding the right partner definitely the key. You know, it goes
Mhm.
both way.
Leads
Yeah.
me to the leads me to the next question, because you just gave me a pass to that. Is, let's take Steve Jobs, Apple. Let's take Elon Musk,
Yeah.
Tesla. How important the role of a founder and CEO is for a company, and do you see it more as a bottleneck, where the founder is like the brand, and when he would be gone for certain reasons, then the company would suffer,
Hmm.
or are you more interested in companies that are running and are less personal brands? What would you say?
Yeah, I think it's also coming down to different stages of the company. In the earlier stage, I do think the founders or CEO, mostly usually most cases the CEO is the founder. It's very important to drive the company growth in the early stage. But that's definitely the key, because they have the passion, they understand the business in and out. They have the vision, they have the goal, what they're gonna achieve in the next few years. Um, but however, when a company go through successfully onto a growth stage, Series C or onwards, sometimes it might make sense to switch to a more operational role, and then for the CEO, which can scale the company. Yeah, particular we see a lot in the technical founders. Yeah, he got technical skill, but doesn't really mean they have the skill to run a multi-billion-dollar company. Yeah, sometimes it's not even do they have the skill, or do they like or enjoy doing that, because running a large scale company is very different than running a smaller one. Yeah, they're more enjoyable, they can do what they do. Yeah, but that's much more, I mean, people's recruitment, operational, running a large scale company sometimes probably doesn't really fit, and if the founder lost interest of doing that, then might be a right fit to come in, hire a CEO to run it. Yeah.
Mhm. In the projects, in the companies that you and your family office has invested in, just out of curiosity, how close is your relationship to the founder? And do you think it needs a certain healthy distance, or are you super close to the founders? How's your relationship? Just as a
We
curious.
are we try not to involve as much as as we can. That's rule. We definitely have the good relationship, yeah, with all of them.
Mhm.
But our approach is, because we, as a family office investor, and a lot of time we just take a minority share of the company, and we want to help. Let's say with that, we can help them grow to raise capital in the maybe a next round when they need it, and they need some distribution or some network, some introduction to different area, different sector, different jurisdiction. Happy to help whenever we need it, but we try not
Mhm.
to be much involved into the operation day to day. Yeah, that is our approach. Yeah, and we know some other family, they are more involved than the others. Yeah.
Thank you for sharing. Kinson, what kinds of technologies or industries are you most excited about?
Honestly, now you can't ignore what AI has been doing in the past,
Mm,
especially in the past 2 years. I would say the
mm,
growth. Even you're looking at the capital market, yeah, the valuation of all these top AI companies, yeah, off the roof. Um,
mm,
we still only seeing the beginning of like the
mm,
execution stage, and how we see a lot of SaaS company is getting killed, and that's another interesting topic when you're looking at SaaS company right now, because if you're just building a tool or a feature, you can easily destroyed by AI. But if you're offering as a proper service, I think that is still a strong need for a lot of market. Let's say in insurance, let's say in accounting, let's say in wealth management. There's a lot of service they need to embed it with AI technology. You build an autopilot instead of a co-pilot to run that. Um, and another sector is definitely in healthcare. We
mm,
healthcare is a lot. It could be some healthcare is a real estate. Yeah, if you're looking at like caring home for the elderly, but let's say the longevity part, and then you're looking at medicine improvement that on a much more explosionary scale in the last 5 years. So healthcare is definitely another set I get excited. And the last bit, I think the third one will be energy transition. Yeah, because for obvious reason. Yeah.
Talking about health, do you use by yourself peptides and supplements to keep healthy?
I start using in the last couple of years. I think it's probably getting to.
Nice. That's why you look so good and fresh.
Yeah, thank you. Yeah, yeah.
Um, what else? I mean, on a personal level, what are some of the, do you have some healthy habits and routine to balance you out between business and health?
Sport, yeah, love sport. Yeah, I love snowboarding. Yeah, that's I try to do as much as I can. Um, Gym, paddle. Yeah, we did a paddle game a couple years
Yes, sir.
ago in Switzerland. Still, could be investment opportunity as well. Paddle. Yeah, that's still looking at
Going.
some in London. Yeah,
Yeah, we talked about it.
yeah,
We talked about it.
it's definitely one of the fastest growing sport. Yeah.
Mhm,
Yeah, that's pretty much it. Yeah.
mhm. Nice. How, and now back to the
Yeah.
founders. How should a founder position themselves in such a rapidly changing world and markets? I mean, how can they survive if technology can replace nearly anything?
Good question, right? I don't think I don't think technology gonna replace anything. There's always some. I think it's just coming on a cycle of technology shift.
Mhm,
Yeah. You're looking at the internet stage. Yeah, it replaced. Say it replace a lot of but they create a lot of new jobs. So, for example, your
mhm,
AI may be replacing a lot of the software engineer, but there's
mhm,
another there will always some job in market and need. I think for
mhm,
founders is they're coming here to they build a company for reason, right? They want to be building something because there is a need in
mhm,
a gap in the market, and there is always a need in different kind of sector. I think just how they navigate, how they find the right niche in the market. Yeah, I don't know what's the
mhm.
next big one is. Otherwise, I'll do it myself.
Mm, you live between these two worlds and cultures, between Hong Kong and
Mm.
London. Um, First question: what are the benefits of having this uh, legs in these two both worlds, and what, how do you see the cultural differences?
Yeah, I think uh, I like it. I think I also quite fortunate uh,
Mhm,
get to experience and grow up in experience so many different culture, meeting many people. I think um, language kind of shape the way how we think as well, because like there's some certain word, let's say in English they don't have any Mandarin or Cantonese, some word with expression in German they don't really have like in English, so that definitely shape how you think, how you meet people, different culture, like value is very different. So I get to
mhm,
spend time mm, in Hong Kong, here, London, US, Germany. So kind of learn a lot of different um, pros and cons in different culture. For me, just absorbing different thing, picking the right trade, I think I value most. Yeah. Why I live. I choose to live in London. Of course, uh, the test is not the best. Yeah, but it's the multiculturalness, and then it's the time zone is great, and then there's quite a lot of amazing founders actually here. Yeah, in London's, and the way of getting along and understanding for all this, I think is definitely beneficial to what I'm doing evenly, yeah. And that's why another reason why I like doing what I do is like kind of sometimes in a meeting between a Hong Kong investor and a US company, I'm just putting them together. They could be saying one thing, um,
mhm,
but the reception is quite different. Yeah. So being there, understand both, kind of can help to remedy, yeah, the situation
mhm.
as well. Yeah, I think making a deal is also between people. Yeah.
leads me to the next question. How many of the deals are happening digitally and how many of the deals are happening physically? How important is the physical interaction between a founder and an investor?
Definitely more and more deals happening digitally. Yeah, yeah. And then personally, I think meeting in person is still very important in terms of like maintaining a good relationship. Yeah, doesn't matter it's your family, friends, investor, partner. Yeah, um, that's very key for human interaction. I think that's very important. But for efficiency, yeah, and it just if you can get it done virtually, get it done virtually. Yeah, yeah, yeah. For efficiency, if you on the paperwork, yeah, you don't want to sign your contract and mail it back. Yeah, to Hong Kong. Yeah,
Kinson, with your broad perception in these different cultures and continents, what would you say in our age and time, and for our upcoming kids and generation ahead? What would you say? What are some of the biggest threats and challenges that you see as humans facing?
that it's. I don't want to be very like pessimistic with what the technology going in, but I'm very curious, but also uncertain what um, could change our life. I mean, we see how social media change our life already, the way we behave, how
Yeah.
the younger generation behave, and then with AI is coming up. Yeah, it will be have a lot of amazing coming up, but will how that affect? Let's say when you mentioned the human interaction, the meetings, and how they see the world, how we interact with the world. I don't know what's going to happen, and I definitely a little bit concerned about that. And then, is that a world I want to live in? I don't know yet because I don't know what the world is going to be like. That is definitely one of the most challenge I think we are facing at the moment, and there's a lot of uncertainty. There's sometimes the beauty of it, a lot of uncertainty. Yeah,
It it um, it has both directions,
yeah,
a lot of opportunity and possibilities, but
exactly.
also risks.
Yeah,
I mean, it's crazy when you
yeah.
think
What's your
about
thought about
human
that?
evolution.
Yeah, what's your thought on that? I'm curious.
How deep you want to go? That's the question. Um, I mean, think about where we come from as humans, how far we have made it, and God knows if we had other civilizations that were
Yeah,
so far developed as we are,
yeah,
and then got destroyed and got rebuilt. I recently
yeah,
read that that it's always a 200-year cycle until
yeah,
certain societies, economies are built up and then get destroyed again and then
yeah.
built up again. I think that's part of evolution: is destruction and rebuilding. And
And we're only
when
living
you
in
ask
a very
me,
tiny percentage, 1 to 2% of time of Earth. Yeah,
yes,
yeah,
and when you ask me about the biggest threats that we are facing, whew, through all the information that we consume today, and we never consumed so much information,
yeah,
we can't separate anymore what is true and what is fake, right? What is AI generated, what is true. I think this the trust that we human had, the natural trust, is fading away.
yeah,
Today there is a news coming up and people say it's fake news, it's not real, right? And so I think it's more and more challenging to figure out what is real, what is fake. There is there are studies that show that yeah, there is a growing generation that is uncertain,
yeah,
that 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 doesn't know there is a crisis of purpose. And somehow it's interesting because before we were living in survivor mode, we were hunting, we were
yeah,
taking care that the lion doesn't eat us, and we developed this brain. But still somehow I feel like we still have the survivor mode, despite we don't need it.
mhm,
It's like Ima- Imagine the most beautiful outcome for human civilization. What would be the next evolutionary human step? Imagine a world where we have reached the Maslow hierarchy and humans, we have a universal basic income, or we have so much, we have created a system where people don't have to work 9 to 5 anymore because robots and technology are replacing more and more workspaces. And people can think about fulfillment and purpose and how they can contribute to society and humanity, finding their ikigai and find solutions. So this is what I wish. And then, then the other side is, what if we end up in a control state? I
Okay.
mean, talking about UK, talking
Mm.
about digital ideas, CBDCs, control state, right? That is rolled out in Europe and also in other parts of
Yeah.
the world. And I have two little boys. So I think about, is this really the world we want to see our kids grow up in? Will it be one day mandatory to be synced with Neuralink and to be half robot, half human?
Yeah.
And so these are some thoughts that I see. There is no fear when I look into the future. I'm always an optimist. I see possibilities and chances, and I believe in humanity.
Yeah.
I believe that yeah, whenever we have challenging times, we human evolve and find solutions.
And the trust bit, I like. Yeah, definitely losing more and more trust between as a human being now. Do you think with the technology involvement, particularly with AI, gonna enhance our trust or gonna destroy our trust between more and more? Yeah.
I would say second.
Mm.
I mean, Gary Vaynerchuk said recently that the gold of the future are physical events, right? That in this high-paced digital world, people are appreciating physical interaction,
Yeah,
right? So somehow it's like we came from land, went to cities, and now the real luxury is to be back on the land, right? And yeah, I think it cycles.
exactly.
But hey, I should ask questions and not the other way
No,
around. But
no,
hey,
this is we're just having a five chat
no,
conversation, no?
no, please, thank you for
Yeah,
asking. Kinson, before we go over to the questions that we have from the audience,
yeah.
I have two more questions. What is one thing every founder should understand before trying to raise capital?
Um, I think they want definitely want to ask themselves where they want to this company going to be. What is the ultimate outcome? I think I mentioned that before. The capital is just a tool to help them to achieve the goal. Yeah, and then
Mhm.
alongside with maybe more important, uh, the benefit bringing in the capital is the partner coming with you with the capital. That's another kind of relationship building to help you to achieve to the goal. So back in the day, you got a lot more and more like bootstrap company. Yeah, the capital will just help to escalate the path where from 0 to 1 or to 2 to 3. Yeah, a lot of company you don't really need capital to be successful. You can bootstrap, but the capital is just a tool. But understand what's the outcome, yeah, and then how to use like the capital to help you to achieve the goal. Yeah.
Thank you so much. One more. If you could give one piece of advice to ambitious founders today, what would it be?
That's basically what I said. Yeah, but
That would it
yeah,
be?
that would be yeah, and I think that is building that partnership. I think I mentioned it quite many times. Yeah, finding the right partner, building the partnership with the investor who trust you and believe in you, and then as a journey, a long journey, 5, 10 or more year journey together. Yeah.
Mhm. And one question that me personally I'm curious
Mhm.
to know from you is, Kinson 10, 20 years ago, what are the golden nuggets that you have collected, the wisdom pieces that you have collected over the last 10, 20 years, that you would give yourself if you could go back?
Yeah, I'll say stay curious. Yeah, because I think curiosity is like the key to make amazing happen. Yeah, how the innovation, how the interaction between us. I'm curious about meeting new people. I think that's another reason why I found the dot, why we're meeting different men. Just curious about um, everything, and then I can learn from them actually. Yeah, and when you're looking at like investing in a company, yeah. But sometimes, yeah, we are learning a lot, yeah, from different founder, different company.
Mhm. For everyone who is listening, what is DOTS? Dot.
Dot is Dot. Technically, we're just an investment platform providing, yeah,
Mhm.
providing access of investment opportunity to family offices. Of course, we help family to deploy, yeah, into private alternative market, co-investment opportunity. Yeah, but for us, it's connecting the right people together. That's what we call dot, connect the dot. Yeah,
Mhm.
yeah,
My superpower.
yeah, yeah. Your superpower, definitely. Yeah,
Uh, in Yes We Trust, we have developed the School of Impact.
yeah,
And part of the School of Impact is the Impact Accelerator for already established
yeah.
founders. And then we have for the unsatisfied, ambitious generation,
Mhm.
people who want to break out from 9 to 5 and find purpose and meaning
Yeah,
and go the entrepreneurial journey. We have created the Find Your Purpose and Feel More
yeah.
Alive course. And then at the top we have the investors network, the mentors, and it's a beautiful red line, that the north star for the aspiring founders and established founders is the mentor and the investor who is financially free, who is able to invest in the next generation. So it's about building and shaping the next generation so they one day become the leaders and mentors that can invest in the others. And that's a beautiful upward spiral that we have created. And my question to you is, why did you decide to join and become a mentor for the next generation?
I think it's really the same reason why why it's not exactly the same similar reason why we started Dot is when we coming back to study of people want to um, learn more from different founders. Also, I think of course helping them from what we come across from experienced investor, we see kind of helping them maybe make a little bit less mistake. Yeah, but tomorrow is like maybe a little bit selfish. Is want to get to learn. Yeah, be curious about meeting, shaping what meeting different amazing founder, meeting people. I think is coming down back to like the study of people. Yeah, I think that's very interesting to me. Yeah.
Thank you so much. And such a pleasure and honor to have you one of the mentors involved. Okay,
Thank you for having
let's
me.
pick two of the questions from the audience. I'm reading here. Um, Private equity returns outpace public market returns, but public markets return have index funds. How do family offices think about higher return risk in private equity?
Yeah, I don't think I think a lot of people ask me from investor if I got from what we see is really portfolio construction perspective. They don't they don't really contradicting each other. I think you always have the a portion of your capital into public market into index fund, and then a portion of them in the a private assets. That depending on how what kind of risk averse risk level preference you are to shaping the percentage, the construction of portfolio. Some people, some family we see they have more than 50% in private alternatives. Some of them less than 5%. Actually, most of them on the less side for various reasons, access, knowledge, expertise. Definitely higher risk, higher return, but I think it's coming down to how you manage your portfolio. You could have both in your portfolio.
Amazing answer. Let's take maybe one or two more. In a world where with increasing transparency, is there a time when doing good could become a real, accepted competitive advantage and not just a nice thing to do? Hmm.
I don't think doing good is. ever nice things to do. Yeah, it's just, yeah, I think doing good is quite essential. I mean, when you're doing good, like a lot of a lot of this company, let's say, they're not probably categorized as like social impact related, but they're also doing a lot of the good to their community, to their industry, to their investor, to their employee. I think doing good is yeah, it's never just a nice thing to do. I think it's quite essential when we even when we look into a company. I think what good did you guys do as a founder, as a company? Yeah.
Mhm. One last question. Let's take here. Question to Kinson. What happens when a founder's mission is strong, but the economics are weak? Hmm.
The economics are weak, then that's probably something wrong with the with the business model. That's usually one of the I would say when you ask me the question, I think I answered that. One of the mystic or something. Yeah, they focus a lot on the mission, the vision. But from an investor, yeah, the economic, the what is a mode is very important to become. So I believe there's always a way to find develop a business model which could still achieve similar vision
Mhm.
or mission. It's very hard to think of any cases right now, and or in that particular maybe who asked the question have a particular business in
Mhm.
that situation. Um, it's a shame, yeah, but I do believe that's not really contradicting. Yeah, if I there's there's definitely some way to find a better business model or create a business model which still achieve a similar vision mission. Yeah.
That's it, Kinson. Thank you so much for your time. I hope that we're not going to hear each other in 1.5 or 2 years back in Davos.
Yeah.
I hope we see each other soon. Might be in London, in Hong Kong, or in Switzerland.
Thank
And I'm
you.
excited. I'm excited about the journey ahead together. I wish you all the best, my friend. Thank you again for your time, for sharing your experience here with the audience. And yeah, talk to you soon.
Thank you for having me. Yeah, and good luck with everything. And it's amazing platform. Yeah, and you build here. Yeah, thank
Thank
you.
you so much. Thank you, Kinson. See you next week, 7 p.m.